Today we're taking a look at advanced patterns, bats, Gartley, ciphers, and butterflies. So we're going to get started here today with the euro yen, and I'm not going in any particular order, just kind of the list in which I have my pairs laid out. But we're looking at a potential bearish cipher pattern forming. And this one's really early, so you have a lot of time to track that. So similar to the gold that we looked at this week, euro yen put in a nice little flag pattern. So we had a nice anchor leg down, we had an upward sloping consolidation, and then we broke to the downside. Now, if you notice, we broke to the downside, but we did not close below our previous level of structure. So there's no sign here that the market says or is telling us or clue that it's giving us that we're likely to continue lower. So it wouldn't surprise me if we had some type of retracement up and really continued in the consolidative mess that we had beforehand. And if that were to happen, something to look out for would be that bearish cipher. And I'm gonna use my pattern recognition software, kind of the manual vision right now, just to kind of make this process easier, because I do plan on looking at a lot of patterns today. But we're looking at our first move, again, that flagpole being our X to A. Our second move, that retracement, so the actual flag pattern being our A to B. The extension that went lower is going to be our C leg. Now, very important that you check this C leg, right? We know that data is going to be a little bit different depending on who you're using as your provider or your broker. And it's important that the C leg meets this requirement. You can see right here that it just barely does. But if your data is a little bit different, it may not. And if it doesn't, that's going to be the difference between a potential valid pattern and an invalid pattern. So it's very important. So if we end up retracing back up, and if we come back up to this level right here, and I'll make this a zone for you, I personally trade these advanced pattern formations right at the completion point aggressively, but we've spoken about this in the past. There's a nice little zone here as well. If price action were to return to that zone, you're going to have a nice potential bearish cipher pattern, which would be a selling opportunity. Next, we're heading over to the pound yen, where the cipher pattern is more of a shallower completion pattern, meaning that it completes closer, I guess, further away from the X leg, closer into the zone. What we have next is going to be a deep Gartley pattern, which is going to complete very far into the zone. You'll see what I mean here. Once again, we'll start with our starting point right here. Let me get my deal on. There we go. Starting point is going to be down here. And this first move is going to be our X to A. This retracement right here is going to be our A to B. Now, very important, once again, just like the cipher, make sure you check the Fibonacci requirements here. This is a very deep Gartley pattern, meaning that this B leg comes very close to the 786 Fibonacci retracement. That 786 Fibonacci retracement is going to be key, because that's going to be the difference between a Gartley pattern and a butterfly pattern. So a Gartley pattern for the B leg cannot touch the 786. So if it does, you're looking at a completely different pattern. So again, depending on what type of data and data provider you had, just make sure you always trade what you see. Very good starter book on these harmonic patterns, by the way. Trade What You See by Larry Pesavento. Trade what you see and not just what you hear me talking about. So X to A, A to B. Our B to C is going to be right here. And if we continue down, this is why I called it a deeper pattern. I'm going to adjust my charts a little bit for you. We're going to have a decompletion right at the low here, right? So you look at the difference between the cipher pattern, and these are different patterns by nature no matter what. But if you look at the difference between kind of the risk profile here in the cipher pattern, where we have this shallow completion at the 786, and again, our stops need to be above the X leg, so it's a longer range of stop loss. Here with the deep Gartley, right, because we complete so far into the zone, basically at the X completion, this is pretty much as close as we can get, you can just see the difference in what the risk profile looks like. Because again, our stops, they're not really going to change, right? They're still going to be below the X leg. All that changes is this completion point, and again, the targets as well. So nice potential bullish Gartley here. Again, you'd be looking for price to come down to here and looking for a buying opportunity back up. So actually, before I go, something else just caught my eye. We may have a secondary Gartley forming as well, maybe cleaner on the daily chart. But if we take this swing high to swing low as our X to A, yeah, you're going to see the A leg of the smaller Gartley actually becomes the B leg of a potential bigger one. So we may have an X to A to B, B to C. If we continue pushing in the bullish direction instead of retracing down here, we would actually have a potential bearish Gartley, more of a shallow one, a bearish Gartley completing up in this zone as well. So two potential pattern formations here on the pound yen. Next up is going to be the pound Aussie tier 1 members. I know you remember this one. We had a cipher here earlier in the week, worked beautifully. X to A to B, B to C, C to D. You see it stopped right on a dime. Right on that 786. Came straight up to hit targets right here. Didn't get your secondary targets hit, assuming you rolled stops to break even after the first ones were hit. But now we have another potential pattern setting up as well. And you'll notice with these pattern formations, I was talking to a trader on the platform the other day because this week we've had a bunch of them, like a lot. And the week before, we were just having a conversation where it's like, man, Akil, I did this back testing and it seems like patterns don't come too often. And what they do is, typically you see patterns in a very specific market conditions, more of consolidative conditions. So when the markets aren't, super directional is where you see these pattern formations. So when we have periods of just directional movement, smooth trending movement, you're not going to notice too many patterns, and they may be far and few between. But when we have market, and especially the Forex market, when it's in more of a consolidative state, which is what it's in about 70% of the time, that's where you see a lot of these patterns form. And they tend to come in bunches. I mean, they tend to come back to back, maybe 3 in a row, and then boom, you got to go a pretty decent period of time before they come again. So it's important that we don't fall asleep. It's important that we don't kind of look at stuff and say, oh, it's just disgusting choppiness, but we actually pay attention to the moves within the moves because we need to take advantage of the opportunities when they come. So we had a nice winner on the bull cipher there. Next one is going to be another bear cipher. So X to A right here, A to B, our first retracement. Again, our extension is going to be our C leg. And if we push down to here, that is going to be our D completion for another, right? I guess a smaller version, the little brother, little sister version of a bull cipher here on the pound Aussie 4-hour. Next, we're heading over to the Euro New Zealand. We've spoken about ciphers already. We've spoken about Gartleys. We're going to go to my favorite pattern now. It's going to be the bat pattern. And we spoke earlier about the kind of the shallowness or the deepness of the D completion and how it's going to be, ciphers are typically going to be shallow. Gartleys can go either way. They can be shallow or deep depending on that B leg. Bat patterns are my favorite pattern simply because I always have a deep completion. So from a risk perspective, it puts me in a very comfortable place. But once again, this is going to be repetitive, but it's great for learning. Swing low to swing high is going to be our X to A. Our first retracement comes to that 50% level, right? You can see kind of the zone here that we need to have for a bat pattern. The upper line is the minimum. The bottom line is the maximum. We're right in the sweet spot in the middle. This next retracement is going to be our C leg. And if price can move down into our 886 Fibonacci retracement, we are going to have a potential D completion for a bullish bat pattern. Canada yen, this one's gonna be a little bit different because this one's actually in the completion zone. Let me get rid of my VS1 levels here. Not the prettiest of patterns out there, but it meets the requirements. We have an X to A starting point right here, this first swing high to swing low, an A to B retracement right here. And then again, this thing gets sloppy in the middle, but nothing has invalidated our Fibonacci requirement. So it's still a valid pattern formation, right? They're not always going to be pretty like some of the ones I showed you earlier. Some of them are going to be sloppy. And this is why it's very important that we train our eyes to look for them. Our next move down, oops, let me redo that. Let me get this out of here. Let me start over here. X to A, swing high to swing low. A to B, swing low to swing high, retracement. B to C is our extension down here, right? Now, this is very important because we have requirements for that C leg, but there are specific rules that say, hey, we can touch a 414 or a 1414, retracement, but we cannot close below. So that's why many people may be seeing this and saying, hey, this is not a cipher because that retracement or extension, for the C leg is so deep. But the majority of that deepness is the wick and it does not close below. So it still makes it a valid cipher formation. Now you can see this one is already in the D completion level. So it is an at market sell if you're a cipher trader and you're catching this on the open, Or, as we always speak about, if you're more of a conservative trader and you want to wait for a specific reason for entry, once price action gets into that zone, so using that, excuse me, if-then syntax, kind of like a CTS trade, you can look for it in here, right? You see price has gotten to this level. We're starting to lose momentum. How do we know we're losing momentum? Remember what we taught you about the slope of the market? Very steep slope right here, high momentum move, slope starting to kind of bend out. Means we may be reaching the apex. There may be a slowdown in buying pressure. There may be maybe not an increase in selling pressure yet, but a potential increase in selling pressure to come. So little clues that say, hey, we might be ready for a retracement. And again, with advanced pattern formations, these aren't kind of big reversal things where we're looking to hold on for weeks and months or anything like that. We're just looking for short retracements from our completion point down to our target level. So keep an eye on Canada yen for the open. All right, I'm going to hit you with one more before we leave. There's a bunch of them out there actually, but I don't want to make this too long and too repetitive. Plus, I gotta take my kids out in a little bit. But we're going to be here on Canada Swiss next on the 4-hour chart, and we have another pattern formation forming. Again, this was one that put in one earlier in the week. I'll draw it roughly on, see if you guys can see it. X to A. It was more on the hourly. X to A to B. B to C, C to D worked beautifully. This is going to be now a potential butterfly. And you rarely hear me speak about butterflies. I don't personally trade butterflies just because they're an interesting pattern. The rules and the ranges are so large, but I guess if you're going to focus on it, you would have a very specific way that you trade it. But for me, the stop loss has always been an issue. It just doesn't go with kind of my philosophy on stop losses and how they work and where they should be. So it's something that I've eliminated from my portfolio, or I used to trade very specific kinds, and this would be one of them, but they were so infrequent that it just wasn't worth it in compared to the other stuff that I added. But this would have been an old school butterfly that Akil traded, and I'll show you why, right? So we're gonna make this short and just kind of go to the 127 completion right up here. So the butterfly pattern, unlike the cipher and the bat and the gartly that I showed you earlier, completes outside the zone, right? So in all of the previous patterns, right, we complete it within the X leg being that kind of starting point, that level of structure. The butterfly in its nature, and so does the shark and the crab, or sometimes the shark, but the crab definitely, it completes beyond it. And I love the psychology behind the butterfly pattern because basically you're trading a loss of momentum. Price breaks out from a previous level of structure, this VS1 level right here. We get a breakout, in this case, a lot of bullish momentum, and then eventually, you know, all those buyers that made their money, they sell, so there's less buying interest, maybe there's new sellers coming in as well. And what you're playing is the relief. So basically the breakout running out of steam and that pullback back into structure before that next extension happens. So I understand that philosophy. It goes right in tune with kind of my normal trading style because I normally look for the pullback. So I expect that relief, I buy pullbacks, and I trade them up. But again, like I said, usually butterfly patterns, what happens is you have a level of structure right here, and then this decompletion is kind of out in the middle of nowhere, and there's no way to kind of protect yourself, or at least in a way that I feel comfortable with because I need structure. But in some very specific cases like this one, you can see that red box, which is our VS1 level, we have a previous level of structure. So in this butterfly pattern, I would be very comfortable with a stop loss, right, above this level. Why? Because this is a previous level of structure, so I have that protection. Now again, most butterflies don't form like this. Most of them form in the middle of nowhere, or the decompletion isn't close enough to structure to make the risk reward work. Because again, this is not a big reversal pattern where we're looking for a full move down here. We're just looking for a very short area of relief. But every once in a while you get one like this, and these are the ones that I really enjoyed. Now, before you guys leave, hit the like button, show me some love. If you have any questions or comments, leave it below. Also, if you're interested in using the software that I used in the video, it is available with your trial membership. Just go over to www.tier1trading.com. Click that button that says start a 14-day trial membership. It'll take you to this pretty cool page where you can read up about everything that you get as far as the software, as far as the training, as far as the supportive resources that we give you, like the live sessions and whatnot, and sign up, play around with it, see if it helps your trading. And if it does, use it. If it doesn't, throw it away. All right. So until next time, plan your trade, trade your plan. You guys have a great weekend. Go Everton.